What's up, everybody? Mortgage rates jumped to 3.4% last week, the highest since June of 2020. So today we're going to go through what the experts are saying, how high are they going to go, and how this is going to affect the housing market for 2022. So let's just dive right in. Because let's face it, unless you're buying a house for cash, the mortgage rate affects that monthly amount you're paying. So it's super important. Traditionally, as mortgage rates go up, prices come down. I'm not so sure we're going to see that in 2022, but we'll get to that in a little bit. But first, let's just talk about what's happening right now in January of 2022. This week's 3.4% increase aligns with what many experts have predicted after recent statements by Federal Reserve Chairman Jerome Powell, as well as the highest inflation in the last 40 years. Chairman Powell goes on to say that he expects to raise rates 3 times in 2022. This week's increase totally contradicts speculation that the rising surge of COVID-19 cases with the Omicron variant would cause rates to go down again or at least remain flat. So the big question is, how much are they going to go up and when is it going to happen? So just to put things into perspective so you know where we are, this time last year in January 2021, rates were below 3% at about 2.95%. But if you go back a year before that, right before the pandemic hit, rates were a little higher than they were today. If you look at this chart, they're at 3.81%. Whereas today, this past week, they were at 3.4%. So how high are they going to go? Well, let's look at some of the experts' opinions. According to Joel Kahn, the chief economist for the Mortgage Bankers Association, he thinks that rates will be as high as 4% by the end of the year. He goes on to say that the main reason behind his prediction is just simply the economy is going to continue to grow regardless of what's happening with the pandemic. Danielle Hale, the chief economist at Realtor.com, thinks that rates will gradually go up, peaking at about 3.6% by the end of the year. Daryl Fairweather, the chief economist for Redfin, also says that she believes rates will go as high as 3.6%, but she also does say that there is uncertainty as far as inflation and the economy, and that could push rates higher. Len Kiefer, who's the deputy chief economist at Freddie Mac, so that although rates are still historically low, he does think that they will increase to 3.6 to 3.7% by the year's end. And then there are some people that think that rates will go down, like Logan Matashami, who's a housing data analyst at HousingWire. He thinks that the rates could still possibly go down in 2022. He just believes that the economy is better prepared to handle the new wave of rising COVID cases that we were when the pandemic first started, and therefore interest rates aren't going to go up. So what do you guys think? According to a recent Fannie Mae study, 56% of Americans do believe the interest rates are going to go up in the next 12 months. I would like to know what your thoughts are, so pause this video, put in the comments. Do you think they're going to go up? If so, how much? And most importantly, how is this going to affect the housing market? Well, here's my thoughts on that. As I said at the beginning of this video, traditionally when interest rates go up, house prices go down. I just don't see that happening now in 2022. We are still so low in inventory, and although the experts say that the rising cases of COVID do not affect the market, I'm going to disagree. Because being here and working in real estate full-time, I can tell you firsthand that a lot of my clients don't want people in their houses still, and they don't want to visit other people's houses still out of fear of catching the Omicron variant. So that's going to stop people from putting their homes on the market. And with supply and demand, with low inventory, high demand, there's going to be multiple offers on homes that are priced well, that are in good condition. And I do say that because I do not believe you can put any house on the market at any price, in any condition, and it will get the multiple offers that we've been seeing in the last 2 years. I mean, think about it. It's the same train of thought of people not wanting other people in their homes. They don't want contractors in there either. So if a house is on the market, ready to move in, it's going to get a much higher price than one that needs work. How can you keep interest rates as low as possible for your particular home purchase? Well, there are a couple of ways. The first one is pretty simple. The more you put down, the lower interest rate you're going to get. So if you can save 10-20% to put down, you will get a better interest rate. The second factor when determining your interest rate is your credit score. The higher your credit score, the better interest rate you're going to get. So you might want to check your credit score before applying for a loan. You can do that on several sites without it creating a ding on your credit report. Credit Karma is one of those sites where you can request your own credit report and it just counts as a soft inquiry, so it doesn't affect your credit score. This way you can see what your own credit score is, and if it needs improvement, which will get you the better interest rate, you can start to pay down some of your credit card debt or other debt to bump that score up before you apply for a loan. And while we're on the subject, I do have to point out, if you are thinking about buying a house and you're going to be applying for a loan, do not apply for new credit cards or a new car loan or lease or finance an engagement ring. Anything that will affect your credit, because on the one hand, it will ding your score. So anytime there's a hard inquiry, your credit score will go down. And also it will affect your debt to income ratio, which affects your loan approval. And once you've done your part and put your best foot forward, you have enough money saved to put a good down payment, you got your credit score as high as it's gonna be to get the best interest rate, don't sit on the sidelines waiting for things to change. Because I really believe prices are gonna continue to go up. And I do think that interest rates are gonna continue to go up. So if you find that right house that meets your budget, meets your conditions, and you can afford it, go for it. Don't stay on the sidelines. Unless you're only planning to live in that house for less than 7 years. I might even say less than 10 years, given the economy and the way it's been fluctuating. Because if you're going to only live in the house for less than 7 to 10 years, there's a good chance you are buying at the top of the market and you may not get all of your money back. I'm just keeping it real. But if you are planning to stay there for at least 7 years, tradition tells us that prices will continue to go up over time and you should feel really good about your purchase. I also do want to touch on refinancing since we are talking about the increase in mortgage rates. A good rule of thumb is that if you can score a new mortgage rate that is 0.75% up to 1% lower than your current mortgage rate, it's a good idea to refinance. You will have closing costs associated with the refi, but they're usually rolled into the loan, so you're not necessarily coming to the table with money. So just to sum it up, as far as interest rates are concerned, will they continue to go up in 2022? Well, most of the experts do believe they will go up to as high as 4%. I personally also believe they will go up. I'm in the camp of 3.7 to 3.9%. And will this bring prices down as traditionally a raise in interest rates usually does? I don't think that's going to happen in 2022. I think prices are going to continue to go up because we still have a lack of inventory and a huge buyer demand. I hope this information in this video was helpful to you. If you have any questions about anything I spoke about today, or if you're thinking about buying in Maryland or DC, my team and I, we would love to help you. Call, email, text, morning, afternoon, night. We got your back and we'll help you make this move as seamless as possible. And if you like this video, please consider telling a friend, hitting that like button, and subscribing. I do appreciate it. Thanks for watching. Bye.